Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, smartest guy in the room, Mr. Michael Becker.
Hey, Paul.
How are you, Mr. Michael?
Things are going well. How are you?
I'm doing well. Everything's going great. I want to kind of just reflect very quickly on some of the events that Old Capital has done, kind of like two special events. On Saturday, March 30th, we had an unbelievable turnout for Hoops for Homelessness. If you remember, we had the best apartment brokers, apartment management companies, title companies, apartment general contractors playing in our 3-on-3 basketball tournament and raising money for City House. I've never seen a more hard-hitting basketball played by grown-ups. The winner and the champion for 2019 was Sabal Capital, so great job, Sabal. We raised over $12,500 for the kids. Again, thanks to all the players, fans, and sponsors that came out to watch. It was a great event. And a special shout out for James and Christine Eng that spearheaded that wonderful opportunity for City House. Also on April 3rd, we had over 400 apartment investors join us at the Grapevine Convention Center and listen to real estate economist Dr. Mark Dotzer. He did a great job in explaining the economic outlook for real estate. I believe that we audio recorded this presentation and have his slides. So send us an email to info@oldcapitallending.com, info@oldcapitallending.com to get a copy of his presentation. Again, it was great. What'd you think, Michael?
Yeah, it was great. We had, 400 to 500 people come see Dotzer, and entertaining as always, a bunch of good information. Still pretty bullish, so I'd certainly go look on, I think it's on Facebook, right? The video of it's on Facebook, and the slides you certainly can get by sending an email in. But I think it was great information, and like I said, it was great networking for 400 to 500 of our closest friends.
So if you live up in Northern California and invest in apartments, come out to see Greg Willett from RealPage on May 9th at the San Mateo Marriott. It's an evening session, starts about 6:30. This is the apartment economist that everyone listens to. He'll go into great detail on what is happening in the apartment occupancy, rental rates, new construction, B&C amenities. He's the guy you want to listen to. So RSVP to the Apartment Investor Network on Facebook, the Apartment Investor Network on Facebook, or just go on the oldcapitalpodcast.com webpage, oldcapitalpodcast.com webpage, and RSVP. There'll be a link there. Also, too, if you liked some of the materials that we talk about in the Old Capital Podcast, go onto iTunes and give us a 5-star rating. We would very much appreciate that. And let's get going in our podcast. But before we do that, I want to talk a little bit about a huge problem. And Michael, I don't think I've even told you about that one of our good clients came across last week. I think you need to know about, especially if you're a general partner raising money or a limited partner giving money. So that it'll blow you away. So I was at a meeting last week with some of my very good clients, and they walked up to me and asked me if I had received an email from them last week. I said, no. So let's call these clients Investor X. And they sent me a copy of the email that was sent on their behalf to their huge database.
Oh, wow.
And their database was, and this is an email that I got a copy of. And this is a Gmail email. So it's from investorx@gmail.com. Let's say that's the email address. I just made that up, but let's say that's what it is. Wednesday, April 3rd, to undisclosed recipients, subject new property passive survey. And it says, Dear investors, I'll be brief. We're wrapping things up with you. I was at a meeting yesterday with our contractors needing funds to accomplish a building renovation project of $250,000. Thinking you might be interested as a bonus, considering the fact that you were listed on the file as one of our passives/reputable investors, and we don't want this opportunity to pass you by. This is a one-time payoff interest rate that would be 45% and pay out over 3 months. Depending on what you can put into this, whatever amount you can afford, you will receive 45% interest rate return. If this is okay with you, then I can add you to the list, and the 3 months payout would be either sent to you either by check or bank transfer according to your wish. Hope this meets with your satisfactory. Let us know ASAP, and I will forward you the banking details. Remittance, it needs to be in by Friday. We're moving on. It's much more fun to report that we have this great investment opportunity coming to you. Let us know if you're interested so we can send you the necessary form to fill and sign. Thank you always for your support and confidence. Warm regards, Investor X, with an email address that's not their email address, but it's close to their email address. It just has an additional I at the end on a Gmail account. Have you seen that before, Mike?
I have not, but that doesn't shock me. So you got to pay attention if it sounds grammatically incorrect. It's probably from Nigeria, and so I'd be a little leery of that. I have heard a lot of like title company fraud going on where you have a set of wiring instructions, someone's mirroring your email account, and then they'll follow right back up with oh, no, here's the new wiring instructions. They have changed. So that's something before we ever send money in. I always call and verify our wiring instructions. So I think that's just a good practice, whether you're sending money to a title company or investing in a deal. I always kind of call and get a warm body. And even when the title company sends me the wiring instructions, I Google and try to find an independent phone number to call, not just call off the sheet, to make sure that we're not sending a multi-million-dollar mistake out that you can't undo very easily. So that would just be very diligent about it and make sure you talk to somebody on the phone before you send money in.
Yeah, these scammers or spammers are coming in, say, two different ways. One way is just like with that email, going through the current databases that they wanted to provide the partnership with a quick rehab loan that has a rate of return of 45%, and which is the kind of the siren song to lots of investors focusing on greed. And then the second way, and this is I've seen this before when I got a little bit more detail, is that these scammers or spammers will send out a new deal with a real-looking PPM and wiring instructions. So it comes from an email that looks almost the same as yours, except it may have a small I as part of the email address. And then before you blow this off and say this couldn't happen to you, this borrower, before he retired and began to assemble a portfolio of apartments, was the head of IT security for one of the largest banks in the nation. He knows his stuff, and they broke into his Gmail account. So my 2 cents, just like Michael, is before you wire your funds as a limited partner, call the general partner or their company and verify the transaction and wiring instructions. Because when the money is gone, it is gone. So this is scary that these scammers are trying to get very sophisticated and they're setting up legitimate bank accounts in the U.S. Crazy stuff, huh?
Yeah, definitely. Usually there's a webinar for most people that invest in these deals. So make sure you watch the webinar, make sure you talk to the sponsor or someone from their team, and you verify all the wiring instructions. Those are all prudent things to do.
Let's get into the podcast. And today we have three friends of mine. I have known all of them for several years. Tim Hammock, originally from Chicago, now lives in Dallas. Catherine Schmeltz, who I call Short Stuff. Jimmy Edwards, who studied finance at Texas Tech University. Jimmy, how did that basketball team do this year?
We made it all the way to the final game. And hopefully we will have a better luck next year.
Also, Catherine went to Texas Tech, too. So what is that, Guns Up?
Yeah, guns up, wreck them.
Wreck 'em.
So they own a few apartment buildings here in Texas, and I want to talk about how you guys came together. I want to understand the journey in assembling a team that actually buys properties and has not been kept in analysis paralysis. And Jimmy, what's analysis paralysis mean?
Look, and never firing.
Yeah, so let's kind of go through it again. What did you guys do after you came out of school? So, Catherine, tell us a little bit about your background.
Yeah, sure. So after college, I worked with a company that owned and managed over 6,000 doors. I worked directly with the owner, and I did everything from property management over to construction rehab. I also did all the purchasing for all of the 26 apartment complexes as well.
Wow.
Yeah.
And then you also worked for our friend Brian Amos. And tell us a little bit about Brian Amos. What does he do, and what did you do for him?
So he does the physical inspections during the due diligence phase for investors. So we pretty much walk every unit.
And so how many apartment buildings with your career with Brian Amos did you think you walked?
I probably walked over 40 apartment complexes.
And each apartment complex had 200-300 doors or
yes.
so? Mm-hmm. So you were the person that walked in, took notes about the washer and dryer, if that was there or not, how the fixtures were on the property. You know, how was there a backsplash? Did it have anything that needed to be updated or improved to the property? You were the person that actually physically walked through every unit.
Yes, I physically walked every unit and kind of make notes. And he had a little iPad that kind of went through different price structures.
Any scary unit walkthroughs?
Yeah, I mean, there's some hoarders that we walk through, some very dirty units. I definitely saw the good, the bad, the ugly.
It certainly opened up your eyes to apartment investing.
Oh, yes.
Good for you. Jimmy, what's your background?
Background's in real estate. I've been in real estate for 12 years. I started out in residential sales, eventually got my mortgage broker's license, and then in 2013 started flipping houses full-time, and eventually transitioned in 2017 to the multifamily space.
And then, Tim, tell us a little bit about you. What's your background?
Sure. I started in public accounting, so I have an accounting background, and then spent some time in the technology space, both in development and in sales.
So why apartments, Tim?
I got interested in apartments after talking to a friend who'd been in the space for a number of years. Mm-hmm. We went through the numbers, how apartments work, how you create value, et cetera. And when I expressed some interest in the space, he recommended I go to a couple weekend events here in Dallas with some local investor groups, which I did. And that was eye-opening, and I caught the bug.
So that's probably a good transition point, because if I understand it, that person that you knew that kind of put it up on the big board that kind of showed you how the NOI worked and how a cap rate worked and how all this whole stuff came together, that kind of helped you meet these folks.
That's correct.
And so, again, how did you guys meet? And was it on a property? So walk us through how you guys came together.
Sure. One of our first deals that we're looking at, me and Jimmy were looking at, was in the Fair Oaks area over by Topgolf. And the closest comp to that property was a comp that was owned by somebody that I knew,
Yep.
Mac Lawson.
And he's the guy, Tim, that you knew that kind of explained how apartments worked. Okay. So, Catherine, go ahead.
Yeah, so I explained to him that, I don't work with Brian Amos anymore now that I'm an investor now looking to buy my first deal. So a few months later, he found a deal and he wanted to bring us on and help pretty much do the management. And,
That's great.
Yeah.
So he was kind of the impetus that got you your first deal. Mm-hmm. Now, is he in the deal too?
Yes.
Okay, so it's the four of you guys in that transaction. So let's talk about the property a little bit. Paint a picture a little bit, and let me kind of walk through it with you here. How many units are there?
So it's 16 units in Grand Prairie.
And what kind of condition is the asset in?
When we first bought it, it was pretty much a D property.
Would you let the dog stay there?
No.
That bad?
It was bad.
Was it in a D neighborhood? Or
no, it was in a C neighborhood, C+ neighborhood. It was definitely probably the worst property in the neighborhood.
And why was that? Why was the seller selling? Do you know anything about the background of that property? And why was he doing so poorly on that property? Because the condition, I would bet, was pretty poor.
Yeah, so I think the city was on them quite a bit. They weren't doing anything to update anything on the property. They just were kind of letting it go and letting whoever lived there, and it just...
So there's no management really involved in the deal?
No, I think it was self-managing. It was,
16 doors is difficult to manage anyway because it's such a small property.
Exactly.
You got to have to be labor intensive in the deal. And what rents were the original rents that you were walking into?
So these units are over 1,000 square feet, and they were townhomes, 2-story, and the rents were a little over $500 a month.
It's $500 a month. And so, Jimmy, you looked at it, and since you have a little bit of a background in rehab of the properties, were you scared of what you saw? Did you have the eyes to see what it could be? Yeah,
we felt very good about it. And we saw the vision. We walked the property and, ran the comps, walked the property, and saw really what it could be, and knew that, with our vision, there was a lot of opportunity there.
So talk a little bit about the rehab of what you guys were going to have to do to the property. So 16 doors, how much of a rehab budget did you guys have on that?
It was about $20,000 a door. So I think we had roughly $300,000, and it needed new roofs, all new siding, new paint job, and every unit was in pretty rough shape. So a full rehab in every unit. We put new vinyl flooring and really took it up to today's
standard of updated property.
Correct.
Catherine, what was the occupancy of the property when you guys bought it?
It was 100% occupied.
100% occupied. So, Jimmy, you go in there and you start doing your rehab of the property. What was the first things that you did to say goodbye to these tenants so you can get in there and do it?
It was pretty interesting. The first day that we showed up, there was quite a bit of foot traffic, and it was early in the morning, and the party had already started. So we knew that we were going to have quite a journey ahead of us, but we went in, and, I think that really people start to see when there's a new sheriff in town, they really already know what's coming down the pipe. So some people started leaving, others were, reluctant to leave, but we knew that we really had, in order to turn the property around, completely re-tenant it. And eventually that's what we did. And the city, once they knew that we had bought this property, the city actually reached out to us and they wanted to team up because this had been one of the worst properties in the area for so long. They wanted to team up with us and help us and, help be a pillar of the community. So the city of Grand Prairie really helped us a lot to re-tenant it and kind of enforce what we were trying to establish.
What's funny is that their partner, Mac Lawson, you may have heard Mac Lawson on the number one Old Capital podcast, because he tells a story about it when he took a D property to try to make it into a C plus property. He had a lot of independent pharmaceutical reps on his property. There was a fence that they would kind of get skinny to get through to sell drugs on the other side. And Max said, I think we can fix this. And they put axle grease on all those rails.
Yeah.
And so they did that one time and they stopped doing it. So Mac, I think, is a good operator, probably a good vision person that kind of saw what he was able to do on his last couple of properties and probably had the vision that kind of help you or guide you to do this deal. Would you say that
Absolutely.
would be correct?
Yeah, I would definitely say he's got a good eye and he understands re-tenanting a property very, very well.
Yeah, he worked with the city real carefully and gave all the city police departments social security numbers and names, and they ran background checks to kind of figure out who all the hoodlums on the property. And for the podcast number one, you got to listen to that one. And then he had a bunch of warrants on half of his tenant base, and he kicked those people off. So great operator, good person to get a lot of information from. So how long ago was that you guys bought the property? When's the rehab? What's the property look like now? Paint a picture for me.
We bought that property a little over a year ago, and it took us quite a few months to displace everyone. And it's night and day. I mean, it was run down. It looked like a stormy property, and now it's bright and colorful, and there's kids playing outside, and everyone's happy. It's a super quiet community with families. And like you said, before it was, drug dealers and drinking 40s outside at 10 a.m. So
not good.
Not good.
So tell me a little bit about rents right now. So we talked about it was $500 when you guys bought the property at Door.
Yes.
Big 1,000 square foot units. What are rents right now?
We're at $1,150 now for rents.
Wow.
So yeah, almost doubled the rent. And
occupancy pretty high?
Occupancy is 100%.
Wow.
So,
and how do you guys manage this small 16-unit building?
So we have a management company that we've worked with and that Max worked with quite often. And there's another 40-unit building down the street. So we lucked out to be able to share a manager between the two properties. And, our cost basis was so low that we were able to have that as an expense.
That's fantastic. And so it's great to have a good partner in Mac to kind of show you what's possible. It's a good thing to work with the city to kind of kick the deadbeat tenants off the property, rehab the property, refresh it, re-tenant the property with new tenants that have only seen the upside of the property. I'm sure the neighbors and the city are just absolutely loving you guys. Absolutely. And Tim, on this one, what's kind of your words of wisdom on this deal?
Yeah, so this was interesting. I know it's not a typical deal, 70-unit deal, 100-unit deal, but we did see opportunity here, so we went after it anyways, and it's paid off. We're 100% occupied, and we'll probably end up selling this in the next couple of months.
Oh, fantastic. So a deep value-added property. You guys kind of pulled the Band-Aid off and fixed it, and now you're thinking about possibly selling it down the road. That's great.
So one of the things that I love about multifamily is that you can create a community. And that's one thing that we did on this property is it was a lot of people that were up to no good, and we re-tenanted the property, and now it's a bunch of families and they play across the street at the park. I went over there about last week and saw that there's a bunch of kids playing in the park, and that really, touches me.
That's great, because that's one of the underlying effects of investing in apartments is improving the community and helping families kind of come together. And so that's a direct impact on that. Let's talk about deal number 2. And Tim, talk to us a little bit about deal number 2, transaction number 2. Where's that property at for you?
Yeah, that property is in Lubbock, Texas, home of Texas Tech.
Texas Tech. Okay, I got that.
Right. So Jimmy and Catherine found that deal, and obviously we're familiar with the area, having gone to school there. And I came back to Mac and myself after they found the deal. The numbers worked. And we actually talked about buying that property, again, just the 4 of us.
Okay.
And then ultimately decided to syndicate it out.
Okay. So tell us a little bit about the property. If you're putting a vision together. What's that property look like? How many doors?
Yeah, that property is 103 doors.
Okay.
A C-class property in a C-plus neighborhood. It's across from Clapp Park, which is 96 acres, the botanical gardens right there. So it has some unique amenities that we wanted to take advantage of. And the vision was really taking it from a deeply distressed property and putting it back on its feet.
So why was the seller selling?
Our understanding was the seller ran out of money
Yeah.
and was no longer investing in the property. So simple items like water leaks under the sink weren't even getting repaired. So as you can imagine, if you're not keeping a property up, it starts to deteriorate pretty quickly. As that happens, tenants were moving out. So we took over the property. It was 50% occupied. Ultimately, it went down to 39% occupied as we took out our bad tenants that weren't paying, et cetera. And now that we've finished all the deferred maintenance, opening the pool for the first time in 5 years, re-landscaping, doing the exteriors, now we're focused on the interiors, and we've brought occupancy back up to 50%.
So, Catherine, I'm going to go back to you since you've walked all these properties for Brian Amos, and you walked through a lot of C properties and maybe a couple D properties. What did you think when you initially walked through that property?
So when we did the due diligence, I made sure that we walked every unit. I actually walked every single unit myself, me and Jimmy. And actually, it was in good shape. I mean, it was 50% occupied, but it wasn't as bad as I would have thought with somebody that ran out of money.
Yeah.
You know, there really wasn't very many pests on the property, you know, stuff that you usually see in C- properties. So yeah, I thought it was in pretty good shape, and I definitely saw the potential.
Jimmy, did you have the vision that you could change the property instead of just taking over someone else's problem?
Yeah, and one of the things that we did like was that the existing tenant base was pretty okay. It wasn't like our other experience where, you know, it was the Wild West, but we had the vision of, you know, bringing the pool back up and getting, you know, bright and colorful pool furniture, and there's a cool party deck with string lights. And so we really added some cool colors and, you know, really kind of brought it back to life. And the residents really do seem to be enjoying it.
When you guys originally looked at the property and you were thinking about trying to buy it, and how many comps did you look at to help you make the decision? And where did you find the market comps? Like, did you guys use ALN or CoStar or just some of your shoe leather about knocking on some doors of the properties in or around the neighborhood? How did you get comfortable with that, Catherine?
Yeah, so we walked probably 10 apartments. We went to 10 different complexes and talked to the leasing agent or the manager and got all the rents. We made sure that we had real comps that had the same age, same property size, same class, and kind of went through it all and kind of put together what we thought we could get for rents.
Kind of walk through it with me in your head. What were the rents as average in a 2-bedroom when you guys first bought the property?
We didn't actually raise rents at all. The rents are about $700.
Okay. So what you were doing is raising occupancy. You weren't raising rents. You were taking it from 50 up to, what is it now?
It's at about 53%.
Right now?
Yes.
So it's working. How long ago did you guys buy this property?
We bought about 9 months ago.
Okay. And now what's the market in that area? And why is it taking so long? Or is this normal, do you think, that's going to take this long to get occupancy higher?
We found that in Lubbock, it's a little bit harder to find contractors. So it took us a little bit longer to kind of go quickly. And then when we did start going quickly, then it became the winter. And a lot of people don't move in the winter. And obviously, when we bought the property, some people wanted to leave because it changed hands and people were fed up. So we dipped down quite a bit. So now we're building up and it's becoming, you know, warmer. And so people are now moving again.
Yeah, you got the front door and the back door. Mm-hmm. So you can get new people in the front door, but the old people who are fed up and don't want to, you know, there's a new sheriff that comes in town that wants the rent to be paid on time and a new manager. They kind of scatter away, like when the lights turn on and the roaches zoom away. So some of the old tenants said, I've had enough and I'm moving out. So you've been filling the building up generally or gradually, but what you're trying to do is keep that door on the backside closed.
Yeah, so we have a pretty good property manager that has really good tenant retention. You know, all the tenants know her. They come and just chat with her. So I feel like now we're not losing people out the back door. We're just now renting it up.
So you guys live in Dallas, but the property's in Lubbock, which is how far away, Jimmy?
It's about a 5-hour drive, but a 1-hour flight. So super, super convenient from Dallas. A quick 1-hour flight. We usually go in the morning and come back at night so we can make day trips.
And how difficult was it to find contractors in that area?
And Lubbock was a little bit difficult, at least finding reliable ones. I mean, we've gone through the same pattern in Dallas, but once eventually you have your list built up and you have contacts, now we have good contacts that we know, like, and trust, and we do business with. But I think initially it was a little bit difficult because the property had 5 or 6 different management companies before we bought it. Mm-hmm. And a lot of the vendors also had not been getting paid.
Oh boy.
So a difficult part of the process was, saying that, a lot of people would come out and say, hey, I've been here before and I never got paid. So rebuilding that trust and establishing that relationship, saying, hey, we're new and we are going to pay you, really was the initial struggle, but we overcame it.
In life, we would love to do a bunch of do-overs.
Right.
What are some of the things that have gone wrong that you wish you could do over again? Anything, Tim, on that one?
Focusing on the contractor a little bit earlier in the process. Mm-hmm. We pulled the trigger on some people that, seemed qualified, weren't the best contractors. Mm-hmm. We're on contractor number 3, I think. And now we finally got the ball rolling, and there's a process in place that we're comfortable with. So, rewind 12 months, we would have put that process in place a little bit earlier so that it was more effective.
Okay. So you guys have deep value add property number 1 in Grand Prairie, deeper value added property number 2 in Lubbock, and I want to kind of touch upon stabilized property number 3, and tell us a little bit about stabilized property number 3. I'm going to turn it over to Tim here a little bit. How many units is that property?
This one's 116.
And where's it located at?
It's in Universal City, which is northeast of San Antonio.
Paint a picture of what this property looks like for somebody who's never been there.
Sure. It's a typical garden-style apartment, 2 stories. It does have sloped roofs, which we typically look for because they're easier to maintain. It's got a swimming pool. So it's your real typical.
Why was the seller selling?
So the seller had bought the property distressed, similar to what we did in Lubbock. And they had put about $2.5 million into the property, all new exteriors, new roofs, new electrical systems, new fire suppression systems.
They did the heavy lift.
So they did the heavy lift. They absolutely did the heavy lift. And they were looking to move capital out of that project into some other projects. I knew the owner, so the property never actually went on the market.
Wow.
So it was nice. We had a competition with a couple buyers versus a couple dozen buyers, which is typical in the Texas market, and ultimately closed the deal.
What did you think when the first time you walked through that property? Do people see the vision of what it can be at the beginning, Tim? Or I will be the first one to tell you, when I walk through some of these D properties, I don't see the vision. I don't get the vision. I need to bring in somebody that has the vision, whether that's a contractor or somebody who's been doing it for 10, 12, 20 times. Are you starting to get the vision after you've done and invested in a number of these deals?
Yeah, you certainly develop an eye for it over time. We're buying properties where I would never have walked through a property like this in the past. I would never have brought my kids onto properties like this in the past. And I bring the kids on, show them what's going on, why we're rehabbing it, show them old units, show them new units, and explain to them why we're creating neighborhoods for good tenants.
And so, again, what did you like about the property? Probably say number one thing, it was a stabilized property coming right out of the box.
It was stabilized. They had put a good plan in place, a good business plan in place, and we're really continuing that business plan. So after they did the exteriors, they started to do the interiors, re-tenant the property at higher rents, and we're going to do that as well on the remaining units that have not been already updated. And then on this property, we had a unique opportunity where there was some space that wasn't being utilized, and we're going to build out 5 new units, which will help us significantly push rents.
And how are rents right now? So you guys have only owned this property for a month or 2 months or so, and so it's kind of the before and after. The before right now, and we'll talk about the after in probably 2 years from now. What's the rents on a typical 2-bedroom property unit down there?
Do you recall that, Catherine?
So a lot of the units are 1-bedrooms or efficiencies.
What year's the property again, Tim? Probably built in the 1960s, would you say?
68, I believe.
Yeah.
And then there's actually 3 buildings. The 2 were built in 68, and the third building was built in 2013.
What's interesting about this property that it's almost right across the street from Randolph Air Force Base down in San Antonio.
Correct.
So there's large military presence right across the street, and this is kind of workforce housing. Is there very much military on the property? Was that a concern for your lender? Did they ask you a few questions about that?
They did ask us questions about that. The seller had purposefully not recruited those types of tenants because they didn't want that to be an issue when they went to sell. So the nice thing is we only have a couple military on property now, but it's certainly an area where we could recruit new tenants if that's something we chose to do in the future.
Yeah, because I would think the property before, which was kind of maybe a C- property.
It was, from what I heard, it might have been a D- property.
and right now, where would you say this property in the scale would be?
Yeah, so this property is, I'd call it a C+ in a C+ neighborhood.
Okay.
And the interesting thing is, in this particular submarket of Universal City, as we walked all the comps in town, nobody had been updating units. So our competition is tired. They may have updated, for example, the leasing office. But if you went into the actual units, they're built in the 60s. They look tired. They've got old tile, old appliances. So we felt by coming in and rehabbing the property and not pushing rents initially, we had an opportunity to have the nicest property in the submarket at very reasonable prices.
Catherine, what's the any idea what the website address to this property is? Do you guys have a website for this property yet?
We do have a website. Is it falconridgeapartments.com, I believe is?
falconridgeapartments.com?
Yes.
So some people who can go to that can kind of get a general idea of what that property looks like right now?
Yes.
So is it individual HVACs or is there a chiller system on that property?
That one has individual HVACs.
That's great. So that worked out pretty well. Did the prior seller rehab some of the individual HVACs? Those have to be redone?
They did. So because the building was built in phases, there's actually different types of units and different types of there's different air conditioning types of air conditioning handlers at different buildings. So some of the smaller units have in-wall units that were all replaced with new efficient units, and then some are on split systems as well.
So tell us a little bit about the loan that you did on the property and why did you do that type of a loan?
Yeah, so the loan on the property we did through Old Capital. So thank you, Paul.
No problem.
And once we had found the property, we brought the property to Paul and said, if you could help us look at a couple different opportunities here, this is our vision, and this is the time frame in which we want to hold the property. And then Paul came up with a couple options for financing the property.
So they had chosen, I think was it a Freddie Mac small balance?
That's correct.
Okay. So it came with a non-recourse piece. So you guys are, say, 3 partners that had signed and probably maybe have had 1 or 2 additional partners, and nobody want to risk their balance sheet. And Freddie Mac does not have a rehab component to the transaction, so we couldn't put additional funds away to rehab anything because the work had already been pretty much done. We didn't need that option. So is it a 10-year term loan?
That's a 10-year term.
With a 30-year amortization?
Correct.
And you had a couple of years of interest only on that deal?
That one has 3.
3 years of interest only. So that certainly does help you out right from the beginning when the property comes out of the box. The interest only not only helps you as operators, but also helps your investors to give them some additional cash flow during the period of time that rents are at the bottom, hopefully on the way up after the time you guys get to stabilize the kind of the new tenant base coming into the property itself. What should investors outside of Texas know about tenant deposits in Texas? Do we usually require first, last, and security deposits? Anybody know that answer?
Unfortunately, we do not.
So that's a little bit of the downside of investing in Texas because you have limited deposits that tenants pay up front. And so one of the things that you'll see is instead of like being in California, you had first, last, and a security deposit. What's the security deposit these days, Catherine, for a property?
I mean, a lot of times it's $300.
Yeah. It's anywhere from $99 up to about $300.
Yeah, I mean, there's $99
So sometimes when these properties turn over, it could be, $4,000, $4,800 to the time that the property's down, the rehab that's necessary to do the carpets, maybe paint the units. So you want to keep these people in these properties as long as possible, because the security deposit of $300, if it doesn't get returned because this work needs to be done, it really has a little bit of an impact to offset your costs, your hard costs. So that's one of the downsides of investing in Texas properties, is that we don't have the luxury of being able to ask for first, last, and security deposits. So it's only anywhere from $99 to $300. You guys don't self-manage that property. You guys have a third-party property manager?
Yes, we have a third-party property manager.
And how many conversations will you have with that management company, say on a weekly basis or a monthly basis?
We'll have conversations on a weekly basis. On our property in Lubbock, we have conversations weekly, and we'll probably do the same on Falcon Ridge.
How do you make sure that they're always engaged? How do you figure out where that property manager is engaged in helping you in the property?
It's just talking to the regional manager, just making sure we're all on the same page, and just constantly touching them and constantly following up and asking them how everything's going.
What kind of information do they share with you? Do they give you a monthly statement? And what's in that monthly management statement that you get from your property management company?
So we get all the financials
okay.
Every month, and then we just kind of get an update of where they are on the property. Okay. And then we also get daily information on the occupancy. So you know exactly what's going on
yes. on that property. So what is in their management reports that the general partner finds interesting, and what would limited partners find interesting, Tim?
Yeah, so one of the reports I like to look at is we have a leads report. So that's an aggregation of everybody that's either phoning into the property or visiting the property and where those leads are being generated from. So it might be Craigslist or Google or Zillow or a walk-in or a client referral, for example. And we're watching those conversion rates. So are people coming onto the property and then ultimately renting? If they're not, obviously there's a problem somewhere in the system. So I find that one particularly interesting, particularly for our Lubbock property where we're in a big lease-up.
Yeah.
We do get monthly financial statements. I tend to go through those with my accounting background,
yep.
and we'll interface with the management company if there's any questions. And then ultimately Jimmy writes up all of our investor communications, and we'll send out a newsletter with financials once a month.
Okay. So how many times will you guys visit the asset? So you guys just bought this property down in San Antonio. You guys bought the property out in Lubbock. How many times will you actually physically be at the property on a monthly basis?
So we usually visit the property at least once a month. You know, I'm kind of head of construction rehab, so I visit the property as needed. If something's not going right, then I will be down there and following up. So now that we purchased Falcon Ridge and we have these 5 units that we're updating and making into units, I'm working with the architect, and so I'll be down there a lot more than once a month.
What are investors looking for in a passive investment in terms of a kind of a rate of return, Tim? What are you seeing out there?
Yeah, that's a great question. So I think expectations are starting to align with reality a little bit more. Mm-hmm. 2 years ago, 18 months ago, investors were probably looking for low double-digit returns. Mm-hmm. And now I think
cash on cash, right?
Cash on cash,
right.
Yeah. Yeah, and currently I'd say if they're being realistic, they're looking at 6 to 7%.
Yeah. So probably my last question is going to be to Catherine. So if you're going to go back and tell a 20-year-old Catherine about this kind of business and something that you would do differently, what might you tell a 20-year-old Catherine?
I would have told 20-year-old Catherine to read more books, you know, to open my mind a little bit more, maybe not party as much, and, you know, just get a little outside of my comfort zone a little bit more.
Yeah. How about you, Jimmy? What would you tell a 20-year-old Jimmy?
Oh, I would definitely have read more books. The internet has been pretty incredible to kind of widen your net for me, and really finding other like-minded individuals, but definitely get out of the comfort zone sooner. And never give up on your dreams.
So I'm not going to ask that question to a 20-year-old Tim.
I'm only 22.
Yeah. Mm-hmm. But so Tim, give me a little bit of, what are something that we didn't talk about in this discussion that you think would be important for people thinking about getting into apartment investing, whether they want to be a general partner or a limited partner. What are some of the things that you think are important?
Sure. What we did and how I believe we became successful fairly quickly was we found mentors in the space. And the nice thing about mentors are they shorten timelines. So they've made mistakes over the years. What they've learned over the last 10 years, they can teach us in a very short period of time. So we have a strong team around us, Old Capital. We've got mentors. We have good contractors. We have good lawyers. And they make the job, well, I wouldn't call it easy. They certainly make it easier to put a deal like this together.
I definitely agree. Being educated, knowing a little bit more about this business and actually putting your big toe in there to kind of figure out this is something you like. You guys put your big toe by buying a 16-unit building and then transition to a larger property, another deep value property. Now you kind of pulled back and say, listen, let's get a little bit of a stabilized property and then kind of figure out from there where we're going to go next. So if somebody wanted to get more information about you, Catherine, and Jimmy and Tim, what's the best way for them to get a hold of you?
To get a hold of me would probably be email. My email is katschmeltz@gmail.com, which is spelled KATSCHMELTZ @gmail.com. And then we also have a website. It's High Five Multifamily. It's HIGHFIVE multifamily.com.
Catherine Schmeltz, thank you very much. Jimmy Edwards, a pleasure.
Thank you.
Tim Hammock, my boy from Chicago.
Thank you.
Thanks for coming in. I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.